Where is it flowing? Well, it's the old story. It's flowing from west to east. China is continuing to buy. The central banks are continuing to buy. Basically, physical gold is bid only. Not only in central banks, but also sovereign wealth funds in Asia and all the rest of it. And also, quite a lot of the super rich in Asia are accumulating gold. And this is in sharp contrast to the West, where we just sort of shrug our shoulders and say, well, why are they doing it? We are completely clueless about what's going on in the bullion markets. But as far as the East is concerned, they see an increasing need to protect their currencies against an inevitable crisis in the West. And that crisis takes the form of unsustainable government debt, which is leading all G7 countries, with the exception of Germany, into a debt trap. The debt trap comes from two ways. I mean, it's not just the mounting debt. And we had extraordinary deficits for the first 2 months of the US fiscal year. I mean, $625 billion or something. I mean, it's just going up and up and up and up. As far as the foreigners are concerned, they see this and they see that there is absolutely no reason why they should buy US dollars and treasury debt at anything like these yields. And the problem is that if they hold off and they want even higher yields, it just makes the whole situation even worse. So what do? You get out of dollars. And to get out of dollars, I mean, you don't want to go into another currency because, the dollar is the king rat of currencies, as it were. You're going to go into gold, which is real money, and they understand it's real money. And that's what we've lost sight of in the West. And this is why Western vaults are being drained, if you like, of any liquidity. Every time gold rises, there's someone in the West who thinks, I ought to take profits. At the Chinese or the Russians or whoever say, thank you very much. So that's basically what's going on. It's the other thing that's extraordinary, which I think I should mention, is the amount of gold and silver that's being stood for delivery on COMEX. I mean, this is a market which, the whole concept of delivery on COMEX wasn't that anybody should actually take delivery, but it was literally to tie an expiring futures contract to the underlying metal price. And but I was totting out the figures. I mean, since Thanksgiving, which is 9 sessions ago, 56.46 tons of gold have been stood for delivery, and 1,240.4 tons of silver. I mean, these are huge amounts. Now, we don't know who's actually taking this. Some of it, I guess, is remaining within the COMEX's vaulting system. But these, nonetheless, are huge amounts which are being taken out of the establishment's hands, as it were, and going into other hands. And also, if you look at the exchange for physical, I mean, some of the numbers going through there are just absolutely enormous. Now, we don't know which way it goes. I mean, exchange for physical can be inward going or inward coming or outward going. But it's a fair bet that we're looking at something which is, I think, likely to be the early indications of a crisis in the market. I have no evidence that that is the case, other than these extraordinary flows. It just reminds me of the situation we had, when we had COVID, everything shut down, and there was an absolute crisis in the exchange for physical market. I think Hong Kong Shanghai Bank lost something like $200 million on that market alone. So, you can't have a futures market where these enormous amounts are being drained out of it, of physical, and at the same time, I mean, premiums, on futures compared with physical have been rocketing. I was looking at it earlier this morning. Silver, it's come back a bit because they've bashed the price hugely. I mean, they really have. And a lot of that has been taking the wind, if you like, out of the futures markets. But this morning, there was a premium in the on the silver futures contract of around about 12.5 to 13% over spot. Why is this? I think that the reason is that hedge funds in particular have seen the problems in the market rising. They know that there's a lack of liquidity and all the rest of it. They never take delivery. They never buy the underlying stuff. They only deal in derivatives. So what they're doing is they're buying, they're buying futures, or they have been buying futures, really to put the squeeze, if you like, on the swaps. And it just smells like a bear squeeze. So, but that a lot of that is just sort of deflating the futures. So there are funny things going on, DK. But it all looks like the markets are running into difficulties, and I don't mean difficulties leading to lower prices. I mean difficulties meaning that the squeeze on the establishment, I think, is really more intense than you would think. Well, we've known that, or at least I've known, that China has been buying gold secretly ever since the early 1980s. The legislation which appointed the People's Bank of China as sole agent for the government in dealing in gold and silver dates from 1983. There was always this mystery that in the big bear market, which really ran from the peak in 1981 all the way through to 2002, there's an awful lot of gold seems to have disappeared because the West was selling it. I mean, a lot of the private portfolios in Switzerland were liquidating their positions. All this stuff was coming out, and at the same time, mine output was increasing. So it's something of a miracle that the price actually didn't collapse even below that sort of 250 level, which more or less marked the bottom. But the reason for that is that China was very, very quietly, taking gold when it was offered, not bidding up, but just quietly accumulating it. And I reckon, this is looking at trade flows. It looks like it was looking at, capital inflows, because, of course, all this was, again, handled by the People's Bank of China, as the sole agent for foreign currencies. All those flows, I reckon, at contemporary prices, were the equivalent, 10% of them were. So I feel fairly confident that that's the sort of number which they had accumulated before 2002, when the Shanghai Gold Exchange was set up and Chinese citizens were permitted to buy gold. Since then, Chinese citizens have accumulated a further 26,000 tons, roughly, figure like that. Now, that's not the only form of accumulation by Chinese citizens, because banks have offered gold accounts, and the Chinese citizens are enormous savers. I mean, in the past, they've tended to buy property, which they haven't necessarily occupied, as, if you like, their pension investment. That has blown up. Stock market, and it hasn't been that attractive as far as the Chinese housewife is concerned. So they've been putting money on deposit, and at the same time, maybe buying some gold. I mean, we're talking about annual savings. I mean, savings accumulating. This is household savings accumulating at the rate of around about $2 trillion a year. So you can see that there's a huge, great overhang, if you like, of potential money going into gold. Now, we've recently seen the People's Bank of China has been reducing interest rates. And as a result of that, the returns on deposits have become less attractive. So I think we're seeing more and more demand, if you like, from the banks to cover their positions of unallocated accounts, if you like, or whether they're allocated, it really doesn't matter. But the Chinese banks, I think, have been covering their positions by picking up whatever gold they can. And I suspect that some of them have been, behind a lot of the standing in for physical on COMEX and elsewhere. I mean, they got to get it from somewhere. India, I think, the Indian government has realized that they've got to accumulate gold as well, and they have been accumulating gold. But I think perhaps India is more interesting in the silver market because she has been encouraging her private sector to become more environmentally friendly. And one of the programs has been to support the manufacture of, these voltaic, cell things. And of course, they take a lot of silver. So, there have been some fairly large purchases of silver, which I think, again, nobody's really selling silver. So, other than what you can get in the markets. And I think that this is what the stand for delivery, I think it's a source of silver as far as some of the industrial conglomerates in India are concerned. So, we've got that. Now, if you look at the situation with central banks, gold has been moving, if you like, out of Western vaults into other vaults. I think that's true. But on top of that, there is the problem of, what actually is the United States position. I mean, the United States has been trashing gold ever since 1971. And a lot of that has been supplying stuff into the market. And I think most of the gold which has been leased over the years has actually been from American sources. And so we're talking about the American Treasury and also the New York Fed. And I think that a lot of this has been covert without the real owners of gold in the New York Fed actually knowing what's going on. And this would explain the difficulties the New York Fed had when the Bundesbank turned up and said, first of all, we want to go and audit our gold in your vaults. And they were refused that. And then secondly, we want 300 tons of our gold returned. Not a large amount, given the amount of gold they had. And they said, well, it'll take 7 years to get it. They obviously didn't have it. It's obviously disappeared. And, Frank Venerosa, the analyst, he analyzed all this leasing, and it was a carry trade. I mean, there was a basis of a carry trade really through the 80s and 90s, whereby banks, took gold out of basically central bank sources, which they paid something like 1.5–2% lease rate for, and they were buying U.S. Treasuries, which were yielding, well, in the early stages over 10%, dropping down to 4.5%, by 1990. So you can see that, the original carry trade really has changed the amount of gold in Western vaults. Now, as, apropos the statement that, something like I think you said something like 60% of gold is now in sort of, if you like, the main central bank vaults in the West. I would say it's less than that because some of it is just not there. It's gone. So, it's an interesting situation. I think that this squeeze that we're seeing in markets is going to be exacerbated by the fact that quite a lot of the gold, say in the New York Fed, in Fort Knox, West Point, whatever,